everyone, we are from Team Spotify. Today we would like to present our presentation about Spotify Financial Manager, which is we as a team will playing a role as a Spotify Financial Manager, and we will discuss about Spotify financial condition. All right. Into the first page, you will see our introduction to Spotify. Basically, this is the Spotify tagline. I will read it to you. Get ready to dive into the world of music with Spotify. From discovering new artists to sharing your favorite songs with friends, explore all of the exciting features of this popular music streaming platform. As you guys may know, Spotify is one of the biggest music streaming platform, and then down there you will see our member's name. Then move to the second page. It's the same. It's also a Spotify introduction. This is the Spotify background. So Spotify basically is a Swedish audio streaming and media service provider founded on April 23, 2006 by Daniel Iki and Martin Lorentzon. The company is headquartered in Stockholm, Sweden. Spotify is one of the most popular music streaming platforms globally, offering access to a vast library of music, podcasts, and other audio content. And then next, how Spotify works. So, Spotify basically like we can use Spotify from all of our device. So we can listen to our favorite music anytime, anywhere with Spotify mobile app. And then we also can access Spotify via web browser. So we also can listen to our favorite music from our PC or laptop. And then connect to device, stream your music to compatible speakers, TVs, and other devices using Spotify Connect. And next is future of Spotify. Improve personalization. Spotify will continue to refine its music recommendations to create a more personalized listening experience for each user. And then next one we will talking about Spotify impact on the music industry. So the first one, music industry disruption. Spotify innovative music streaming service has revolutionized the way that people listen to music, posing a major challenge to traditional music industry players. Number two, new artist discovery. Untapped and emerging artists have used Spotify to get discovered and to build their own fan base. Number three, data-driven insights. Artists, labels, and marketers rely on Spotify analytics to track users' listening patterns, discovering emerging trends that they can use to engage with their fans. And then here we will see Spotify financial statement. So the first one, I will show you the income statement. You can click here, and this is Spotify company, their income statement here. And then next one, we also have their balance sheet. You can see here their assets, long-term assets, current liability. Here they write it really clear here. You can just click on it and you will see. Also the cash flow, it's also very clear. You can just click on it and you will see it really clear. All right, jumped to the next one is Spotify financial ratio. Here we have their long-term solvency. You can click on it. Short-term solvency, 3 turnover, profitability, and market value. Here we provide you all the data. You can just click on it like this, and then they will show the data that we already collect before. Yeah. So In assessing Spotify financial performance, key financial ratios play a crucial role in providing insights into various aspects of its operations. The current ratio, calculated by dividing current assets by current liability, stands at 1.02, indicating a healthy liquidity position. This suggests that the company possesses more than enough short-term assets to cover its immediate obligations. Furthermore, the debt to equity ratio, which measures the proportion of debt used to finance operations relative to shareholders' equity, is at 0.92, reflecting a balanced capital structure. A lower debt to equity ratio generally signals lower financial risks. With a receivables turnover ratio of 0.7924, it implies that on average the company is able to recover around 75.24% of its accounts receivable within the specified period. Simply put, for every dollar of credit sales, the company managed to collect about 0.7924 in cash. An elevated receivables turnover ratio typically signifies effective receivables management, indicating the company's ability to promptly collect payments from customers. Conversely, a lower ratio may indicate slower collections or raise concerns about credit and collection policies. Additionally, the return on equity is minus 38.1%, indicating that the Spotify ROE suggests that the company is not generating enough profits to provide a satisfactory returns to its shareholders based on the equity they have invested. It's generally considered an unfavorable financial performance indicator, and investors often seek positive ROE values as a sign profitability and efficient use of shareholders' funds. A P/E ratio of minus 19.55 implies that the company is reporting negative earnings per share. In the conventional calculation of the P/E ratio, negative earnings result in a negative P/E ratio. This scenario is common when a company is incurring loss and the stock's market price may not accurately reflect its valuation. Investors commonly employ the P/E ratio to assess whether a stock is overvalued or undervalued. In the context of traditional analysis, a negative P/E ratio suggests that the company is either not generating positive earnings or is undergoing financial loss. And for the next page, Caroline will explain it to you guys.
Okay, next we're going to talk about the cost-benefit analysis. And first, the cost. We will need the development cost. This is for hiring developers and designers, technology, infrastructure, and software development. And the second one is the marketing and promotion, for the advertising and promoting the new feature to existing and potential users. And the last one is the operational cost, which is for the ongoing cost for maintaining and supporting the new feature. And next, for the benefits, we assume that we will have increased user engagement, which can make the potential revenue increase from the increased user engagement. And the next one is the user growth, which is attracting new users and retaining existing ones. And the last one is the competitive advantage, which is strengthening Spotify's position by offering a unique social listening feature. And here, the risk. The first one is the technical challenges, which is the potential delays or complications in the development process that can lead to increased costs. And the second one is the user adaptation, the uncertainty about whether the users will adopt to the new feature as expected or not. The third one, 23, the 5-year treasury yield is 4.14%. And next, the NPV. And the first one here is for the investing. And for the example, Spotify wants to do an investment for expansion into a new market. And the assumption for Spotify investing NPV is the first one, initial investment or year 0. So Spotify decided to invest $50 million in expanding its services into a new country. And the next one is the annual cash inflows, year 1 until 5. The company anticipates increased subscriber growth, resulting in additional subscription fees and higher advertising revenues. And the expected annual cash inflows are projected as follows. The first year it's $30 million USD, second year $40 million USD, third year $50 million USD, and fourth year $60 million USD, and the last one, the fifth year, $70 million USD. And the discount rate is 10%. And after doing the calculation, for Spotify's expansion into a new market is approximately $125.28 million USD, a positive NPV that indicates the present value of expected cash inflows over the specified period exceeds the initial investment cost, suggesting that the expansion project has the potential to generate positive value for the company. And next, for the operating assumption for Spotify's operating NPV, the first one, the initial investment. For Spotify, the initial investment could include costs related to technology development, licensing agreements, marketing, and infrastructure. And the annual cash inflows. Spotify's main sources of cash inflows include subscriptions fee and advertising revenue. Subscriber growth, average revenue per user or ARPU, and advertising revenue would be key factors to consider. And then the discount rate. The discount rate should reflect Spotify's cost of capital, incorporating factors like the weighted average cost of capital or WACC or the risk rate hypothetical calculation. So let's assume a simplified hypothetical scenarios for the example. The first one is the initial investment or year 0 will be $200 million. Second, the annual cash inflows, which is the year 1 until year 5. Year 1 will be $300 million. Year 2 will be $350 million. Year 3 will be $400 million. Year 4, $450 million. And year 5, $500 million. And the discount rate will be 8%. And after the calculation, we will know that the calculated operating NPV for Spotify. And after the calculation, we will know that the calculated operating NPV for Spotify is approximately $1.34 billion US. A positive NPV suggests that the present value of expected cash inflows over the specified period exceeded the initial investment cost, indicating that the company's operations are potentially generating value. The next one is the financing. So we will assume that the bond issuance or the year zero, Spotify decided to issue bonds to raise $100 million for funding a major technology upgrade. And the annual cash outflows or the interested payments. The company will pay annually interest on the bonds at a rate of 5%, and the annual in year $5 million and fifth year $5 million. And the discount rate will be 6%. And after the calculation, we will note that the financing NPV for Spotify's bond issuance is approximately minus $120.13 million USD. A negative NPV suggests that the present value of the expected cash outflows or the interest payments over the specified period exceeds the initial financing amount. In the other words, the cost of financing through bonds when considered interest payments result in a negative NPV. Next, moving on, connect with our small essay. The first one is the impact of COVID-19 pandemic on global financial markets by Caroline. And here I attach my gamma. You can click here if you want to see the small essay. And then we also attach two articles about Spotify's financial on COVID when COVID approach. Okay, next, moving on to the next slide, we have the connect with small essay. The first one is the impact of the COVID-19 pandemic on global financial markets by Caroline. And you can click here if you want to see the gamma or the small essay. And also we also attach two articles here for these topics. And here is what we got from the articles. And the next one, the financial crisis lessons from history by Nana. You can also click here if you want to see the small essay, and also two articles. And we have the conclusion here. Okay, next, our team goals. We, as Spotify's financial managers, aware that we play a crucial role in Spotify's financial health. Through our professional financial planning, we want to ensuring Spotify's financial stability and do our best to supporting the overall strategic objectives of Spotify. In addition, we will create a budgeting and cost control to develop and manage budgets to allocate resources efficiently and determine the optimal mix of debt and equity to minimize the cost of capital. And our recommendations for Spotify's in the future. We recommended that Spotify continues to do an investment in technology and innovation to stay competitive. Therefore, Spotify will continue to advance in their streaming quality. In addition, it's also important that Spotify to explore opportunities for future international expansion so it can expand the user base on revenue and other potential in the future. And our team conclusion, the music industry has changed its revenue model. Music streaming platforms generate most of the revenue of the music industry. Future research in the music industry will focus on two directions. Spotify has grown to the largest global music streaming platform. It generates revenue of more than 5 billion euros and has more than 100 million premium users. And that's all from us. Thank you for listening.